The second wave of coronavirus has triggered another round of restrictions and lockdowns in many countries in Europe. The surge in COVID-19 cases in the world has rattled the equity markets in India and abroad again. The anxiety over a potential vaccinate for the entire world's population is adding to the worry of investors. During uncertain times like these, investment in gold is often considered a safe bet. The upside of this situation is that these worrying trends are likely to be the factors contributing to stable gold prices. Amid low interest rates and high inflation, gold prices are expected to stay firm until a vaccine is in sight. Just as Diwali inches around the corner, many investors wonder if this is the right time to invest in gold. How gold prices have been affected by the second wave in Europe? Over the last few weeks, COVID-19 cases surged drastically in several European countries, including France, Spain, and Germany. This has led to a retreat in gold prices from $20.50 an ounce in August to $18.80 an ounce in October. Gold prices in India dropped too. From Rs 56,000 per 10 grams in August, prices fell to around Rs 51,000 and are fluctuating almost every day. Gold prices have been rising since May 2019 and have jumped over 50% in just a year, from $12.25 an ounce to $18.80 now. In the second week of August, the gold prices peaked at $20.80 an ounce. Prices in India touched Rs 58,000 per 10 grams. Will the gold prices rise further? Historically, gold prices surge when there is uncertainty and fear in the market. As soon as the announcements were made about a Russian vaccine in August, gold prices declined. Currently, since there is uncertainty around economic recovery globally, the prices of gold are expected to stay stable. At present, India is engaged in a standoff with China, which is adding to the uncertainty in the market. The US Federal Reserve signaled that interest rates will be kept near zero until 2023, which is expected to keep the dollar index weak. All these factors jointly are expected to keep the gold prices firm at least for the next couple of months. Is it a good time to invest in gold? It is the best of times and worst of times for investment in gold. Investors should avoid making investments for short-term gains, as many vaccines are under trial and factors fueling gold prices may disappear without a warning. However, a long-term gold investment could be a good decision. Gold at Rs 51,000 or Rs 52,000 may seem expensive today, but will give good returns in decades to come. Over the last 15 years, gold prices have surged from around Rs 7,000 to over 50,000. The future gains may not be as dramatic, but it will be still worthwhile. Investors could consider investing 5 to 10% of their portfolio in gold. Irrespective of Diwali, investors could look at investing in gold on a periodic basis. A monthly or quarterly investment in gold can enable an investor to accumulate gold and reap good returns later. Which is better, investment in gold coins or bonds? Gold coins and bars should be bought only for jewelry consumption. Best way to invest in gold is through sovereign gold bonds, especially the gold bonds that offer capital appreciation in line with gold price movement and 2.5% coupon per year. Bonds are issued in the form of a document and eliminates any possibility of theft or mishandling. These bonds mature after 8 years, but the investors have an option to exit after the 5th year. Interest earned on gold bonds is taxable and adds to holders' income. However, tax imposed is at a marginal rate, and any capital gains on these bonds at maturity is tax-free. Apart from bonds, another option is gold exchange traded funds or ETFs. As per AMFI data, the total assets under ETFs are around Rs 13,589 crore. Investors can diversify their portfolio by investing a small amount of capital in ETFs. However, some people prefer buying gold in the form of coins and bars. If you are buying physical gold for investment, then the making charges will affect the price of gold coins. Making charges vary between 8% and 15% for coins. The prices of gold bars are usually higher than that of gold coins.